Hey guys, I'm Michael Angel Martin here, and I wanted to make this quick video for you just to, to try to make a quicker, shorter video that shows you the signature move we're looking for. All right, now there's a couple other moves that we look for that are more advanced, but this is the one that's the most obvious that you're going to see over and over and over again. I want to show you one that's a sell and one that's a buy. And then I also want to show you show you ways to figure out where to put your stop loss and what your take profits should be. All right. So I'm going to try to make this a quick video and run through two different examples. So here I have the euro odd. All right. Now the pattern we're looking for is this right here. You see this consolidation where it's just creating highs and creating lows. All right. The bankers make this pattern on purpose because they need to create liquidity or create money that they can go ahead and take to place their orders. And what I mean by that, you and I, it's easy to place orders because, because we don't do a lot of lot sizes, right? We don't do massive lot sizes. Like the banks do like 1,000 lots at once or 1,000,000 lots. And, say we're doing like one standard lot, right? So the system just needs to go find someone who's doing a standard lot in the opposite direction, or a combination of people that adds up to a standard lot. So for example, if you're buying the euro odd, there needs to be someone on the other side selling it, right? So if you win, you're taking their money. If they win, they're taking your money, right? So, but the banks, when they go place 1,000 lots or 1,000,000 lots, there's no one on the other side that can match that order in the other direction. So they have to manufacture their money. And what they do is they manipulate the market in such a way that it creates these patterns that retail traders are used to seeing, right? And they start forming these patterns like M's and W's and double tops and double bottoms and channels and things like that to get the retail traders to start getting into trades. So what I mean by that is, popular patterns are M's and W's, right? So if you're an M and W trader, and you have it in your mind that this pair is going to trend up, all you're going to see is W's, right? You're going to look at these W's and goes, oh my God, this thing's going to go up. And you're going to try to buy at the bottom here, right, and go up. So what are you going to do when you get in those trades? You're going to put your stop losses down here below these lows, all right? However, if you're someone who's convinced that this is going to go up, all right, let me... hold on. Let me get all these out of here. You're convinced these are going to go up, down, you're going to see M's, right? And you're going to go, oh my gosh, I need to buy here or buy up here. And when you do, you're going to put your stop losses up here, okay? Now also there's those people that try to play the breakouts, right? So they might put a buy stop here, so if price breaks out, they're in the trade, or a buy sell down here, a sell stop down here, so that when it breaks out, they're in the trade, right? So all these different retail traders are all, loading up their money on both sides of this. Now the bankers, they can see these positions, and when they see enough money is there, they're going to go now and collect it. And the way they do it is by an impulse move out of that channel. Now the impulse move can be up or it can be down. I'm going to show you an example of both. If it goes up, then they're planning on selling. Okay, if it goes down, they're planning on long-term buy. So you can see here that they burst it up. All right. Now this candle right here, we call it the banker's candle. This is the candle that makes us all the money. But we don't know if this is a banker's candle until price shoots back down and takes out some of these lows, right? Because people are putting some of their stops here, they get some of their stops here, right? So, there's more money, sitting in these little pockets. So they jam it down to take out some of those lows. When they do that, we know that this is the banker candle, okay? Now, typically what I do is I draw a line right at the base of that candle, right? That's my entry point. Because when they put in orders to create this candle, when price turns around and goes this way, they're in drawdown on that candle, hundreds of millions of dollars. So they need to manipulate price back up there so that they can cash out of those orders at break even, grab that money. So now they've got all this money. They've got their money back from the first manipulation, and then they just drop price, right? And that's how they do it. So you can see here, right? They manipulated it up, they dropped it down, took all these lows, and they came right back to this line. It wasn't to the pip, but they came to this line and then dropped it, right? So if you're in this trade, so this is where, let me pull this out, it's a little sniper. This is what we call sniping the market, right? We see this pattern and we're just patient. We wait for this pattern, we wait for the impulse, we wait for the down impulse so we can identify that candle, and then we go ahead and put a sell limit order right here. When price comes up, it triggers us in, and then it drops, and we make money. All right? Now, then the next question comes, well, where do I place my stop, and where do I place my take profits, right? Now, there's a couple ways, and you guys, as you go through training, there's different scenarios on stop losses, right? But typically, now this is the two examples I'm going to show you. This candle is huge. The candles are typically not that huge. They're usually big candles, but they're usually like around this size. So say this was the banker candle, right? And it's not, but just for example, let's say this is the banker candle. Your stop loss could typically be right above, right at the top of the candle. Not the wick, but the top of the candle, right? So your stop loss for this particular one would be 17 pips. I'd probably round it to 20 and have a 20 pip stop loss, right? But unfortunately, that's not the case. We get this big ass candle, so we got to figure out, where are we going to go? Now you can do 50% of the candle. One thing I like to do is the 71 fib. As you learn as we go through examples, it's not going to probably make too much sense right now, but the 71 fib is a magic number. The 71 and 78 work really well with this strategy. And what I would do is I would measure the move from the bottom to the top, all right, with the fib. Oops, I got to go the other way, sorry. From the top to the bottom on this particular one. All right, and then I draw a box. And again, guys, this is a little bit advanced. Don't worry about getting this right now. All right, and I'd get rid of this. So this is the 71, this is the 78. I would put my stop loss just above that 78. So probably like right there. I'll color that red. All right. So if I get triggered down here, I'm looking at about a 28 pip stop loss. All right. Now your take profits are the lows or the highs, right? So we're going down, so it's the lows. Because they want to capture, they've already captured this money, so the next one would be down here, right? So this would be my take profit down here. So check it out. It comes right down and takes out those lows, right? So look at the money, the risk to reward on this, right? So if you put a sell limit right here, you put your stop loss right there, and your take profit is down here, right? That's a 1 to 4 right there. Okay, 1 to 4. I've been averaging 1 to 5, 1 to 10. Okay, this one's 1 to 4 on your money, which is still amazing, right? You can improve that if you had a tighter stop loss. So if you went to this 71, which is about 50% of this candle, now you're at 1 to 6, right? So it's going to take a little bit of practice to kind of finesse your stop loss and figure out the proper place at the proper time. Right, because it's going to depend on structure and the size of this candle. If it's a small candle, you can just use the top like I just showed you. There's going to be, different ways you're going to learn this, right? And we're going to help you guys with this as we call out trades. We're going to identify these stops for you, all right? The take profits are very easy. I don't think it needs much explanation. You just target the lows, and when it's going up, it's targeting the highs. All right, so let's go look at another example. I already have this drawn out on the pound. It's back here. All right, this one's not as clean here, but it's the same thing, right? So you've got price, consolidating here. It's making highs and it's making lows. And then what's it do, right? It busts down, takes out these lows, busts up, takes out these highs. And then what's it do? It comes right back here's the candle, right? Here's that big ass candle. Again, they're usually not this big, but just these two examples I happen to be pulling out. So this big ass candle right here, what's it do? Comes right there, almost to the pip, and then shoots up. And then where does it go? Taking out these highs up here. Right? It's like clockwork every time. Now you stop on this one if we did the same thing, right? If you use my little Fibonacci trick here. All right. Right there. You're talking about a 24 pip stop loss, all right, on that one. If we would have used the 71, that would have been a 15 pip stop loss, right? Go to your risk to reward. We're going to go long position right here. Let's use the outside one for worst case scenario. And then, it depends what take profit you go for. If you go for this one, you're at 1 to 3. If you go for this one up here, you're at 1 to 4. And if you go up to this one here, you're at 1 to 5. Now, if you move this to here, if you had picked this as a stop loss, you're 1 to 8 on that one. 1 to almost 6 on this one, right? And I've been getting way better risk to reward than this. These are probably the worst case examples I'm showing you here as far as risk to reward, which is crazy good for the retail trader. The retail trader typically goes for 1 to 2, 1 to 3. If they get 1 to 3, they're ecstatic, right? And here I'm showing you 1 to 5, 1 to 6, 1 to 8, right? So this is the pattern that you're looking for, guys. This is the pattern that you're looking for. You're looking for that consolidation. You're waiting for the breakout. Now, it doesn't always take out the highs on the other side. Like if you look at the Euro AUD that I just did. Oops. Can't put that back. Let's see, this was right there. So if you look at this one here, right, it broke up and it didn't come down completely. Sometimes that happens. It did take out some lows, right? It apparently was enough money that it needed to make its move. But the perfect signature move would be if it came down and took out all of these lows. That's the, perfect, but it doesn't always do that. It'll come down and reach out and take out a couple of lows time to time and still make its move. All right. But here on the pound USD, it took out both sides. All right, took out this one first, took out this side second, then came back, touched the candle, and went off for pips. All right, so this is what you're going to want to burn into your mind. And as we trade this and as we give you examples, right, you're going to start to see this, right, over and over and over again. When you see it go into this pattern, you're going to start to get excited, right? And then you just wait for that impulse out, take out the lows, impulse up, take out the high. Opposite if we're going to do a sell, comes back, taps that candle, and we're off to the races. All right. And then I think the take profits are very easy to figure out. The only thing that you're going to have to play with and master as you practice this is finding out that that ideal stop to use in all the different situations, right? And this is you'll see me use this 71, 78 a lot. I really like it. I use it a lot. I don't know if the other guys are using it yet, but one of the educators showed me this, and it helps me out a lot. Not only with stop losses, but finding out where in the banker's candle things are going to happen. So that's stuff you're just going to learn as you watch us and as we take trades. I just really wanted to give you two examples, a sell and a buy, and then give you examples of how to pick stop losses and take profits. Okay, so that is it, guys. I just wanted to make this quick video. I'm going to add it to the unit section. Hope you have an amazing day, and I look forward to hearing your success stories.